I wanted to welcome everyone and wish you, first and foremost, a very healthy and successful 2021 ahead. Our year's pretty much wound down. We had a hell of a year. Many of you have followed me on YouTube. I've done some free videos. We've had some pretty decent calls in this market. Yeah, we could have bought Bitcoin at the lows for the year. Yep, we could have bought Zoom and held on and gotten out at $580. There's a lot of things we could have, should have, would have done. However, here's what we really did. In January, we created what we called a class, and I had everyone sign up for it. It was extremely valuable course lesson. And to look back after a whole year, and the most historic year of trading in history, lockdowns, COVID-19, presidential election. I mean, the list just goes on and on and on, right? This was an incredible year. I must have had my head examined to come out and say, hey, guy, I believe in my work so well. Let me just do a stupid class called Razor Focus, right? And focus on and be razor sharp for 2020. And by the way, I'm going to create a trading model using my Algo optimizer program that we developed through TradeStation's technology. And I'm going to build a workspace for you for S&P traders for the year. A long only daily, a long only swing 60-minute model, a short only, so just in case the market sells off in a period of recession or economic contraction, and then my famous long and short only, because after all, we're not communists here, we're capitalists. So how did it perform? Well, first off, let's just give you an idea. Still, the market currently, it's in an active long position, while the blue line on the model, by the way, what do you see is if you get into a breakout buy and it's a red line, it shows you that was a buy, red's bad, it's a loser. Blue is good, a blue line from connect the dot that shows the entry and the exit and the type of exit. And as you can see right now, the market is still in a daily long since November, right after the election. It's still long. It's at its intended profit target, but like other trades, sometimes it goes beyond its profit target, and we let the trailing stop functions kick into high gear. And by the way, this is the entry. The red line was the initial risk. Orange is emergency stop. And then these little highlighted gray lines that you see here, that's the trailing stop function. So there at this point, we will have two different trailing stop functions, an emergency and an active end of day trailing stop function. And then the third exit would be holding period. It doesn't hold a trade forever. There's a max function in there, all right? Now, we also created, so bottom line, it's still long. And here is our model with a long and short. This is the razor focus model. What's impressive about this is even in J-Person Asset Management, we use a variation of this model. This model did, as you can tell, I only go back since November, so let's get into looking at the performance summary since the beginning of the year. I don't want to show you the back test study because this went live in January, right? We had this class, I believe it was January 10th of 2020, and I said, here guys, here's a great program. And we could use this to trade off of or use it and piggyback these trades, use an option strategy if you want and at the money, all kinds of things. But the bottom line is we trained everybody how to use this model. Now, the performance summary, let's take a look at some of the settings. It's based on a $100,000 account, all right? We have all kinds of functions in here, but let's get to the performance summary. It has a almost 1.6, 1.59 to be exact on long sides. It's got it's 1.94 on the short side, which is fantastic. That's the profit factor. It has a 56% of the longs are profitable, 52%. So bottom line is this really a good strategy? Hell yeah. On $100,000, non-leveraged, using SPY, it's up 36%. So let's take a look at a couple other variables that are important to me. What's the drawdown? Your max trade drawdown on a $100,000 account. From peak, by the way, your max drawdown on average, 39. So what is that? Less than 4%. So that's a pretty amazing program right there. People would spend, and there are these models for sale on the street. People sell stuff like this for $400 a month, $500 a month. I mean, that's like ridiculous, right? So the Algo 17 Extreme, it allowed people to optimize their own program, take a class, and we gave this out to anyone anyway. So what's the difference between buying someone's system for $500 a month for the signals versus having this yourself and being able to create other strategies in other markets? That's what people miss, the whole point of this. Let me repeat that. Instead of spending $500 to get email text signals, you can create this, get the right education, get the training, get the program, have it, and then if you expand your education, expand your knowledge in the markets, use it for your lifetime to develop other markets. Maybe you want to start trading gold. Maybe you want to start trading biotech. You can create your own programs and optimize them and come up with your own systems. That's what the Algo 17 did. It's the coolest thing since sliced bread as far as trading is concerned for a retail trader, in my humble opinion. And, you know, that's why a lot of people come and listen to me and follow what I have to say, because I'm not the biggest guru out there. I don't do internet marketing. I don't do free Yahoo YouTube stuff promoting trading chicks and all this other stuff that's out there. We put out real information, real trading, and follow it, and we try to put out as much transparency as possible to help traders understand how the markets work. Right now, if I just shared with you this number here, if you bought the S&Ps and suffered through that amazing drawdown that we saw in March, buy and hold return for the market is, S&Ps up 12.97% for the year. This strategy is like 3 times that for your money. So the return on initial capital versus its return on the account, those are 2 different numbers. And I always look at what is the return on initial capital. So this razor focus model, it's not like hypothetical. This went live, put in people's hands, and this is a really great strategy, bottom line. The periodic returns on a month-to-month basis. January lost 1.5%. So you'd be like pissed. February, not so pissed. March gave back some of the profits. April, off the chart. May, pretty decent. June, unreal. July, boring. August, which, by the way, should we be trading in the summertime and selling may go away? Isn't that what it kind of indicates a little bit, even from the performance of the market? We came back in September and picked up a couple extra bucks. October didn't fare well. But boy, since the election, unbelievable. December. Well, here's December. Where's the market gone since December? Nowhere. It's chopped around. And quite frankly, it hasn't really credited because December's not over and that trade we're not out. So it can't tell you whether you're making money or losing money more. As you know, you are making money with this strategy right now. So it's got an emergency trailing stop. The month's not over either. We'll see where this thing goes. My guess is we got upside coming. We're going to get a breakout. We should see, in my humble opinion, I think another maybe 2% upside. Who knows? 375 is a number that we've had from other technical analysis work that I've done. So I'm still looking for the breakout above that high and to get up near the 375. And it'll take probably not next week, but into the week of the New Year's or the Christmas New Year's week. So we'll see what happens. Try to update you on another YouTube. But I wanted to go through exactly what we started with at the beginning of the year. How did we do? I'm sure everyone did okay this year, some better than others, obviously, but the moral of the story is this was fabulous. This was a great year, and this was a great year to have launched this class. Now, because it was such a great year, I want to also think that maybe we should do it again. And if you're interested in attending another razor-focused class, and if you didn't attend, then you should. If you did attend, it might be a great refresher. And we'll go through and walk through the Algo 17 Extreme program and see where we could look for other markets for opportunities of strategies to build and use for 2021. I think there's going to be a lot of opportunity in a lot of reflationary products, energy, for example. Interest rates could change dynamically now that the Why? Well, now that there might be more available cures and the economy gets better, is there going to be a need for more stimulus from the Federal Reserve as we look forward into 2022 and beyond? So I think it's important. I'm going to be excited about doing the class for myself selfishly. I would certainly encourage you to sign up and look for an email. We'll do another video so that you can get some information on how to attend. If you don't recall what we did last year, man, it's on our YouTube videos as far as promoting. And that, by the way, was a great video. But that announcement class. So whether you trade Thinkorswim, Interactive Broker, Fidelity, this is a class that everyone can use. And it's based on time-tested techniques. Thanks for listening. And if our paths don't cross until 2021, let me just say, have a very healthy, safe, and to you and your family, wonderful holiday season. Merry Christmas and happy, healthy, prosperous New Year for 2021 for all of us. Amen. Have a great rest of your trading year. Thank you.